There are tons of business podcasts to choose from, but only one has the stamp of approval. Kristin Stampini is South Florida's leading real estate entrepreneur and your trusted source for everything real estate.
Hi, I would like to welcome my listeners and thank you for joining us today for another episode of my podcast, The Stamp of Approval. I'm Kristin Stampini, co-founder of the Stampini Platinum Real Estate Group with RE/MAX in Boca Raton, Florida. I'm also a certified real estate coach with Craig Proctor and the owner of Global Virtual Real Estate Assistants. You may have heard us on the radio, and I'm also a real estate investor, a national trainer and public speaker, and a certified inside sales agent trainer. The Stamp of Approval podcast was launched to share and educate other realtors, consumers, and other business owners across North America by sharing value and content to each and every one of my listeners in every single episode. And to also share the knowledge of real estate, business, sales, and mindset oriented. And my guest here today, I'm so excited again because all of you were talking and told me how you loved Matt Weaver. So today, as a seasoned mortgage loan originator, Matt Weaver has dedicated his life's work to servicing the mortgage needs of the South Florida community for over 20 years. In 2018, Matt was ranked 22nd in the nation for the most closed transactions by Scotsman Guide and remains atop of the list of producing originators in the United States. Matt currently serves as a loan officer and vice president of sales of the Matt Weaver team at CrossCountry Mortgage, one of the largest lending teams in the nation with 32 professionals serving every aspect of a mortgage transaction. Matt is known for his impeccable closing rate, thanks to having one of the most thorough pre-approval processes in the industry. Much of Matt's success and reputation hinge on his consistent execution of his 4 pillars of value, uniquely designed to increase real estate partners' sales, productivity, and efficiency. So welcome, Matt.
Well, thank you so much. Thank you so much. My gosh, that's a lot of information, but thank you.
Yeah, well, it's impressive too. And I know because I've closed many transactions with you over the years, and you are everything that I just said. And today, because my listeners just loved you, okay? And you were my first episode ever. And because of that, I wanted you to come back. And, in today's episode, and this is something that people talk about a lot. And I think I saw on Facebook that you were actually asking in one of the real estate groups, you were actually asking why people wouldn't, and it was to other realtors, why people wouldn't take a FHA loan, right? Instead, they would take another loan upon an FHA. So today, what we're really going to get into is the 10 myths of FHA and VA financing, because so many out there really need to know what the myths are, right? Because they don't.
Oh, absolutely. And Kristin, a lot of myths, and we're going to demystify that here today, because the truth of the matter is that it's tough for an agent, because what's happening is they're kind of playing follow the follower, right? So what they see, and then they say to themselves, okay, if that agent's not accepting an FHA offer on their listing, maybe I'll do the same thing. But the truth of the matter is they're missing out on a ton of market share. And in a market that we think where we're heading, I think we can kind of agree could be a little different, could be some challenges that are coming ahead. We need to expand our buyer pool as much as possible. And so today's episode, I think, is going to be of significant value for both buy-side and list-side agents.
Absolutely. And the consumers out there to really know, how to set yourself up in the industry and to set yourself up to winning offers and to make sure you're working with the right realtors. Okay, so really it's broadened across, every listener out there that's listening today. So why don't you take us and talk to us about it? Because in today's market, there are a lot of people, and starting in other parts of the country, out in California, markets are starting to soften in certain areas a little bit. Now, we aren't seeing so much here in Florida, right now. And, just take us down, maybe even so what you're seeing in Florida, and also the myths of the VA and the FHA loans.
Sure. So I think we can agree that we are starting to see inventory sit a little bit longer than normal. Now, we're a seasonal area, so we're not going to really be able to determine where we stand market-wise for another couple months. So really Q1 is going to be a big indicator for us. But what we want to go over today is what I put together, the top 10 myths for FHA and VA financing. And again, buy side, list side, and consumer. These myths, I think, are going to really help increase the understanding and awareness of what I happen to believe is some of the best set of financing in the industry.
Oh, awesome. I'm ready. I'm all ears.
Okay,
Matt,
okay.
So go ahead and start.
Well, okay. So ready for this? Number 1, FHA and VA guidelines make it difficult to qualify for. So let me demystify that. The reality is that FHA and VA is the most simple loan product to qualify for. Period. End of story.
How? Why?
Well, let's put it this way. In fact, conventional financing, which is, of course, the natural go-to, is much more difficult to qualify for than FHA and VA, and for a whole host of reasons. If we understand for just a moment that FHA and VA is a very liberal loan product because it's insured by the federal government, right? So think about this. If you have conventional financing that is insured by private enterprise, and you have FHA and VA that's insured by the government, if you were a lender, would you be willing to take more risk considering the government is willing to pay you off if the borrower defaults on their payment? Certainly, right? So on the conventional side, it's insured by private enterprise. So if that private enterprise, let's say, goes belly up for just a moment, then the lender is stuck with a loan. So because of the government insurance, it allows for the guidelines to be much more expansive. So what do we mean by that? Number 2 myth, without good credit, I won't qualify for an FHA home loan. Totally false. So get this, Kristin. FHA doesn't even have a credit score requirement.
Really? I thought it was like high 500s.
Nope. In fact, there's no set guideline. So it's whatever the automated systems allow, meaning when we run those loans through, let's say, desktop underwriter known as DU or LP, loan prospector, whatever the results come back with, if it says approved, we're closing that transaction, even if it's less than a 580 credit score. Now, keep in mind, conventional financing is a 620.
You know, one of the things out there, and I think it might be a little bit of either had a rough experience with, and I'm talking about another agent accepting a VA or FHA loan as opposed to a conventional loan. And I think the reason why some of the time is they've either had a bad experience previously or they don't really know the guidelines, or they're maybe not educated enough on it.
Well, the truth of the matter is that it all starts with the loan officer and their quality of work with the pre-approval process. Look, the biggest challenge that agents have, the biggest risk, is the loan officer that they're doing business with. Okay, so the challenge in my industry is that there's no set standard in a pre-approval process. Most take the easy way out. Most take preliminary information. They don't gather the items. They give fast answers. And then they say to the real estate agent, go out there and find the property. Oh, and by the way, once you find the property, then we'll gather the items and take a look. And that's where our process is 100% different. We created our process in 2009 where we do everything up front in a very quick, timely manner. It's a 7-day-a-week operation. We take the application by phone, 10 minutes, gather the items. Once the items are gathered, it's only a 2 to 4 hour review process the right way. And then we have a detailed consultation with the client. So at the end of the day, it all comes down to whomever is pre-approving that client, not loan product. Think about that.
Okay. Yeah, that is interesting. But, so many people say out there, and I'm talking about other agents when they have, multiple offer situation. And again, with a VA or an FHA loan, and sometimes they can get a conventional loan, right? But they choose, and I'm talking about the buyer, chooses the FHA loan because it's a better product for them, correct?
Absolutely. And it can be a better product for a whole host of reasons. I'll tell you a quick little funny story for all of our listeners out there. So 4 years ago, roughly, I had an investor. We'll call him Jack, right? We call him Jack the Flipper, okay? Not Jack the Ripper, okay? All right. So Jack the Flipper, here's what he did. He called me 4 years ago. He said, Matt, I heard great things about your process, and I want you to be my preferred lender in the venture I'm about to take on. I said, well, Jack, what are you looking to do? He said, here's what I'm going to do. I'm going to buy and rehab anywhere between 10 to 15 homes a month, and then, of course, sell them. He said, but here's what I'm looking for. I'm looking for an FHA buyer and a VA buyer specifically. I said, that's so interesting, Jack. I said, why? What's the rationale? He says a couple things. He's like, number one, most agents put on the MLS, cash or conventional. So they cut out 35% of the market right then and there. So folks, FHA is about 35% of the market. So Jack said, while the typical agent is running away from this buyer pool, I'm running towards it. And let me tell you another reason why, Matt. I think we can agree, here's Jack's words, I think we can agree that if someone has a challenged credit score, or let's say puts down less money, they typically tend to not negotiate as much as, let's say, a 780 credit score is someone putting down 50%. So I'm going to yield a higher sales price. I'm going to be able to negotiate better terms for myself in terms of being the seller. And you know what? If they're pre-approved the right way, Matt, this is what he's saying to me, I know the loan's going to close no matter what. So that said, he had a firm understanding that the FHA loan and the VA loan has such a wide, we'll say, guideline set that allows for so many potential buyers as long as they're pre-approved the right way from the beginning.
And that's a great point. Jack, I love it because Jack's right. And, so many people are saying, well, and I'm talking again about the agent, they're afraid that that so many things in the home is going to need to be fixed before it can sell, or the appraisals come low in an FHA or VA loan as opposed to a conventional loan. So can you kind of talk about those things?
Absolutely. Let's touch on those. So watch this. Number 3 myth. I've had a short sale or a foreclosure in the past. I have to wait 7 years. False. Guess what? You have to wait 7 years on a foreclosure for a conventional loan. But here's the deal. On an FHA loan, 3 years. 3 years you have to wait for a short sale or a foreclosure. That is it. I mean, talk about liberal, right? I mean, you could really, now we talked about this, don't shoot the messenger. Okay? I am just passing the message here. But it's only a 3-year wait period. Number 4, appraised values come in lower with FHA and VA. Folks, whoever talks like that is not informed of how the process works. Appraised value is not based on loan product. It just isn't. And so, when I hear that, it can be a little frustrating because the truth of the matter is that whether you're on the sell side and whether you're on the buy side or whether you're the consumer, you deserve better. And the truth of the matter is that appraised value is not contingent upon the actual loan product itself.
And the appraisal only sticks with, because this is another thing, is they say, okay, well, if it's appraised, with an FHA product, and even when if let's say for some reason that deal just didn't go through, let's say, whatever, inspection or whatever, but it doesn't hold in for a conventional loan. Okay, right? So let's say a conventional loan comes in second. A lot of people think that appraisal sticks with the property with a conventional loan. Is that true?
Well, okay. So the appraisal stays with the property for 90 days, right? Now.
But that's just FHA.
That's FHA only. So here's the deal. So if you take the FHA transaction and it doesn't go well because of the appraised value, then the next offer should just be a conventional offer. So the conventional set of financing, it doesn't deter the conventional side of financing. So it's just your next buyer will be conventional. Now, the likelihood of there being a vast difference in terms of appraised value goes back to the thought process of the appraised value is not subject to loan product. It just isn't.
And I think, 10 years ago when I started in real estate or whatever, in the FHA wasn't as popular then. I saw a little bit of difference. But today, I'll tell you what, I don't see any difference,
right,
pretty much. I mean, as far as appraisal to appraisal is conventional. So I think that is such a myth now today to so many realtors out there. And anybody that's listening to this, FHA appraisals, no. Really the conventional and the FHA, I see come side by side on what the price is, what the appraised value is.
They're neck and neck.
Yep. And then the other, big thing is the inspection. So they think that the inspection process is a problem, if it's a VA or an FHA loan.
Right. So number 5, perfect timing, Kristin. Appraisers are much more strict regarding property condition. Okay, couple things. As it relates to property condition with FHA and VA. Now, for Florida, here's the good news. Very rarely, and we do a lot of volume, very rarely do we ever get an FHA appraisal or a VA appraisal with a property condition concern and we say, oh gosh, I wish they went conventional. Very rare. Anything that is typically a problem for FHA and VA is going to be a problem for conventional. In the Northeast state or in some other states where there's a lot of weather-related issues, the peeling paint is a popular topic, which can be a hot button. The truth of the matter is that in my humble opinion, I don't think someone should deter away from an appraisal or actually an offer with FHA and VA based on property concern. Because like I said, if it's a challenge for FHA and VA, it's more than likely a challenge for conventional.
And that's exactly what I see. Before it was like, okay, you have to have appliances, right? And that's all changed now. So I think a lot of the people out there that are looking at what you need in a home and, and what needs to be taken care of and everything, it's changed so much. And what's happening is, either newer agents or maybe agents that aren't as experienced with the FHA loans, that it's changed a lot since then, right?
Absolutely, 100%. If we think about this now, watch number 6. Takes a long time to close both FHA and VA transactions.
Now that is such a myth. And you know what? But before, okay, they always said, okay, now the FHA and the VA, make sure you give it 45 to 60 days, which is opposite today, right?
Oh my gosh. Okay, so for FHA, we have a true 7-day close model. Just took 2 transactions under contract up against competing, of which those competing, one of them had cash offers in it. So the truth of the matter is that we can close an FHA loan in 7 days. As far as VA goes, interestingly enough, I closed my fastest VA loan in 8 days. Phenomenal. Did it at the end of December of last year. Now, the VA is different by one respect. They control the appraisal process. So that VA appraiser just so happened to do the appraisal very quickly. So what we say on VA would be 21 days or less, because the VA does have up to 10, 12, 14 days roughly on when they have to bring the appraisal report back. Long story short is this: you can close an FHA loan very quickly. You can close a VA loan very quickly, just like you can with conventional financing. So that is a myth.
Okay, that's awesome. I mean that you're explaining that to us. And the other thing is that the FHA actually can close faster than as a traditional.
Oh, absolutely, 100%.
Okay, so that's another thing. So let's see, we've covered 6, right? So FHA and VA don't allow condominiums. Is that true?
So here's the deal. Now, specifically with Florida, FHA and condominiums, very, very few are approved for FHA. But there's a link that we can send the listeners that they can look up to see. They can just go to FHA.gov and check the particular association on a national level. But here's one thing that most don't know. They feel or think that VA follows the same list as FHA. And the truth of the matter is that there are many VA approved condominiums. So that's a niche. Okay, I'm going to repeat that. There are many VA approved condos that most agents, most mortgage people don't even realize, okay? Yep. So there's a buyer pool out there that you can market your inventory to, especially in a shifting market. So for those that have condominiums listed, I would highly urge going to va.gov, checking the association to see if it's approved. Because if it's approved, you're talking 0% down, very liberal loan product to where you can market those properties too.
And that's such a great point. And the thing is, though, is that does change all the time, right? So the condominiums that are on it today could be different than 2 months from now or 3 months. So it does expire. You got to go back. You got to check them all the time. And you got to make sure they're current and up to date.
Absolutely. Or they can call me. How about that?
Hey, that's even better. That's even better. Okay. And then, a lot of people think, and this is, for the buyers out there and such, that FHA and VA actually cost more. The loan costs more.
So they don't cost more in terms of, let's say, lender charges. The only thing that costs more is the upfront mortgage insurance with FHA, and then also VA has a funding fee. Okay, now think of the upfront mortgage insurance premium that FHA charges as a good thing. And look, even though it costs us money, number one, it's financed, so they don't have to come to the table with that money. But number two, look, if the government didn't charge this, the product would go away. And that means somebody at a 580 credit score wouldn't get the loan. right? So when we think of mortgage insurance, I know it costs us money, but the reality is that it allows for us to get the product. So at some point in time, we have to share that cost, right? And on VA, which is, I happen to believe, the best product in the marketplace, and rightfully so. So thank you for all of your service, those who are listening.
I agree. Thank you. And I agree. It is absolutely the best loan out there.
With that said, there isn't monthly mortgage insurance. There is an upfront funding fee, which is a percentage of the loan, once again financed. But for those vets that, let's say, unfortunately got disabled or what have you, that funding fee is waived. So just check with me or your local loan officer, and they'll let you know if you're eligible.
Okay, that's awesome. And then, so VA has mortgage insurance, right? And then,
well, VA doesn't have mortgage insurance; it has a funding fee.
Right, the funding fee.
One of the myths is that VA has monthly mortgage insurance.
That's right. Monthly, right.
And the truth of the matter is that it doesn't. Just that funding fee, very clean loan with 0% down, by the way.
Right, and the FHA, you can also go back and you can refinance it to get rid of that at a later time. Right?
Absolutely.
That mortgage insurance.
There's no prepayment penalty. Oh, and one other thing, really, really important. For those sellers out there who are thinking of selling, even though that we're in a rate environment that has gone up, let's say in the past 24 months, remember, FHA loans are transferable. They're assumable. So I want you to think about that. So you're talking about a seller right now that, listen, agents, if you're meeting with your seller tonight or tomorrow, let's ask them what set of financing they have on that home. Because remember, about 35% of the market has FHA loans. So if they have a loan that has a 3.5%, 3.75 rate from 2, 3, 4, 5 years ago, they can assume that new buyer can assume that loan. There's some parameters to it, but that's an interesting perspective, right?
Yeah, and that's one you really don't hear about.
No.
Okay.
Well, that's what I'm here for, Kristin.
That's right. And myth number 10, you must be a first-time home buyer to get an FHA loan.
Total myth. You don't have to be a first-time home buyer to get an FHA loan. Absolutely not. You can be a first, a second, a third, a fourth, a fifth, a sixth, a ninth, 10th, 11th, however many homes you have desired to purchase in the past. It's all good. You do not have to be a first-time home buyer for FHA nor VA.
Wow. So you just covered so much amazing information. So if we are to tie this episode or to end this episode up today, and you can just give me a few awesome tips as a realtor, working with another realtor, and then also as a consumer, so two different ones. Give me a couple tips to end this episode today of what you should do.
Absolutely. So, from an agent's perspective, boots on the ground, you're on the front lines. If we enter more of a shifting style market where the buyer becomes a little bit more plentiful, right? Or sellers become more plentiful and the buyers start seizing a little bit, we have to open our mind up to financing, because what ends up happening is that when it's a true seller's market, yard sign can go up in the ground. There's a slew of buyers, and whoever buys it, right? When that converts, we have to now roll up our sleeves and sell the inventory. So here's my question. How do most retailers sell inventory? When it's a tight market, they sell it through financing. So you're driving down 95, Kristin. There is a billboard, and it shows a BMW 5 Series for lease. My question to you is, does it say $79,000 for the car or $535 a month? And we are the only industry that, for the most part, doesn't advertise by payment. And so I think accentuating the fact of what something really costs in terms of down payment and monthly payment is something that we want to get really well in tune to and adjusted. And then, as we talked in your first episode, then also illustrating the true cost of homeownership, because now we have to sell the inventory. BrandSmart, walk in there. They're unloading a lot of refrigerators every weekend, and they're doing it by financing. 0% down, don't pay for 24 months. We have to get creative, and we have to open up our skill set to financing. So for those that have relationships in place, meet with your loan officer. Understand what's out there. What can you offer? For me, I'm constantly educating our partners so they have that skill set, and I think it's going to be really important.
Okay, awesome. And, for the consumer out there, that's looking at different options, talking to the loan officer, right? And not just thinking that FHA might not be their best option, because it could be.
Absolutely. So from a consumer perspective, what happens is that when you're speaking with a loan officer, you probably want to get more than one opinion. And I say that because the truth of the matter is that you can go to two different attorneys for legal work, and get two different outcomes. Right. You can go to two different financial advisors and get two different rates of return, just like a loan officer. I know we want to systematize and automate everything in our lives. However, when it comes to purchasing a home, when it comes to financing that home, it's a very clunky process per se, which means you need the human touch and the human element involved. And that's why we developed a system to where we are hand-holding our clients. I don't care if they're a first-time home buyer or the most seasoned through the process through and through, because it's virtually one of the biggest decisions and purchases that virtually 80% of the people make out there.
Yeah.
So get a second opinion, walk through the metrics together. Don't be afraid of taking your time. And remember, as I always say to my clients, there's never a silly question.
That's right. That's right. So if either an agent wants to reach out to you and really because you educate your agents all the time, or even if a consumer wants to reach out to you, first of all, make sure you mention this podcast, the stamp of approval. And how can they do that, Matt?
Absolutely. So my team and I operate 7 days a week from 8 a.m. to 9 p.m., 364 a year. The only day that we're closed is Christmas, literally. And my direct dial is 561-212-6503. You will get me personally. Email address for everyone who wants to email, mweaver@myccmortgage.com. For smoke signals, go ahead and do it to the northeast. But you can also text me on it, because that's my direct cell, by the way. So you can also text me. There's no silly questions. Look, we're built for the agent. We're built for the consumer. If you're thinking of buying a home, okay, what we do differently is we do everything up front so you know exactly where you stand before making any big decisions, such as selling and or buying and or breaking your lease or what have you. So it's really important to leverage our process and our system.
Oh, so awesome to have you here today, Matt. And to our listeners, thank you once again for joining us. And thank you, Matt.
Oh, with pleasure. Thank you so much for the opportunity.